And now we move to our first roundtable discussion. And the main question is, how does private capital enable the growth of Europe's champions? This panel is moderated by Alexandra Vacroux, who will invite her guests to the stage. Mrs. Alexandra, where are you? Hello, the stage is yours.
Panelists, please come to the stage. Yes, you're first. Come on over. It's okay. I'll find you wherever you're sitting.
Am I the first panel?
Yes, I think so. Wait.
Alexandra.
No. Next panel. Ingo. Robert, yes. Alex.
He's only on the second panel.
Yes, it's okay. We make him speak twice. Thank you so much. We're on an extremely tight schedule here. So let me get started and do what Prime Minister Rama suggested, which is after speaking, there is the doing. So let's start with the doing, and please welcome my first panel, Banking on Growth. Here, we're going to start the conversation about how commercial banks and private equity funds can better identify, finance, and scale high-growth ventures across Southeast and Central Europe. Future 500 is meant to be a mechanism that connects Europe's most promising companies with the capital they need to go global. But the post-Series A gap is real. Many companies from South and Central Europe have struggled to access late-stage financing, especially compared with their peers in the United States or in Asia. So what we're going to talk about here today is how can Europe's financial institutions lead the next wave of scale-up success? I'm going to ask each of our panelists a question, which they'll have 3 to 4 minutes to answer, and I'll be very draconian in cutting you off, just so you know. Don't take it personally. And then we'll have a lightning round with a quick question for everyone. So let me start with Ingo. Ingo Bleier, as Chief Corporate and Markets Officer, you lead Erste Group's strategic activities across corporate banking and capital markets in Central and Eastern Europe. What can regional commercial banks do to identify and back Europe's scale-up champions, especially beyond the startup phase?
All right. Can you hear me properly? Thanks for having me here. Supporting this initiative, I think, is one of the things we can do. Banks have vast pools of capital that are mostly devoted to lending. And you will find a lot of bankers hiding behind Basel 1, 2, 3, and 4, and a lot of other regulatory constraints in telling you that it's difficult to allocate equity. That's not true. We can allocate equity, and we probably should allocate way more equity to seed finance, venture capital, and private equity activities. We as a group, we're investing directly into companies, early stage venture capital. We put a lot of money into venture capital, private equity funds, but it is a very small portion of our overall activities, which are traditionally mostly focused on lending. So I think it's a lot on us to devote more capital. The capital is only one thing. The other one is time and effort. Taking time here, taking time to speak to entrepreneurs, as was mentioned. Time to really make sure that we utilize our vast client base to have entrepreneurs connect with each other. And here I think with modern technology, it should be possible to do this in a way more efficient way going forward. And then to devote management time. In which sense? I think we have a lot of experience because we see what goes wrong. Our workout departments are full of very established, entrepreneurs and companies that have at some point financial difficulties. So with all the knowledge and experience that banks have, the coaching, the mentoring we can do to young companies can be very, very strong. We don't do enough of this. So as Eddie Rama said before, getting something out of the budget, in our case, capital management time, is quite an internal struggle But by supporting this and similar initiatives, I think we will be getting there. So devoting more capital, effort, management time to identify and back up companies is, I think, what we should do. At Erste, if you go into a program called Erste Forward, on our website, you will find some of those things. Seed starter programs, venture capital investments. But I think we can step up that effort massively. Not only our group, but in general banks. And whenever banks, they love it, hide behind regulation, challenge them.
Thank you. Robert Knorr, as managing partner at MidEuropa Partners, you're a leading private equity investor in the region, and you've scaled several companies into European success stories. What are the biggest opportunities that you see now for post-growth capital companies, and how can private equity step in earlier? If you could please also give a specific example from MidEuropa of a success story, that would be great.
Sure. First, let me tell you, I'm very, very pleased to be here in Slovenia. We started MidEuropa 26 years ago this year. I was there from day one, and actually one of our first first projects was in Slovenia. We invested at a relatively early stage for who we are, what kind of investor we are in Telemach. It was an entrepreneurial project backed up by a few Slovenian entrepreneurs and also some Slovenian corporates, as Slovenia works in a more cohesive way across different players. They allowed a foreign private equity fund to invest in a minority stake. Over time we took a majority stake, and this is an example of scaling up. It was basically a consolidation of a cable TV industry in Slovenia as an alternative to Slovenia Telecom, which was then the only offerer of telecom services of internet. Not only Telemach has become a very important player in Slovenia, but through a number of acquisitions and investing in growth, we have created a company across the space of the former Yugoslavia, which has become to be known as United Group. Then we sold it. Our job as private equity investors is to invest in companies, to scale them up, to improve them, and then to sell them to the next buyer, who then scales them up further. And indeed, that particular company have gone beyond the borders of the former Yugoslavia into Bulgaria, into Greece, has become a major player in its industry in this region. I just want to say that when we first invested in Telemach back in 2000, that was an investment of only 20 million euros. At that time, it was a lot, but it was a small investment. We merged it then with SBB in Serbia, created United Group. We sold the company in 2014 to a big private equity firm, global private equity firm called KKR, for 1 billion euro. Well, that company, United Group, today has 1 billion or more than 1 billion euro of EBITDA, which is the indicator of profitability of a company. So it can just tell you, through this, in a way, personal story, I would say, what scaling up means, where the region has come after 25 years. We still have a lot to do, a big road to go through. But things have changed. I agree with the previous speakers. Slovenia is a different place. The former Yugoslavia is a different place. The region is a different place. In terms of MidEuropa, over the last year, and it's a little bit of boasting, but I have to do that as well. It was our record year in exits. We have sold companies for a total enterprise value of 4 billion euros in 1 year. We started, with the fund of, a few hundreds of millions of euros, and we are doing deals of, tens of millions of euros. And these days, a player like us, that comes after the growth stage, that comes, when the companies are already more mature, when they have the cash flow, when Ingo and Dinko will come and finance it, when leverage can be put onto the companies. And what do we do after this growth stage? An investor like us not only brings capital, it also can diversify funding sources. It can help the company to attract lenders, to attract lending, be it from banks or other types of lenders. we can help those companies to professionalize the running of the companies, particularly the governance. And what we bring and what we have specialized as a player over the last 10 or so years is in bringing operating or contributing to the operating expertise of the companies, and particularly helping those companies to go international.
Thank you very much. Dinko Lucić, as President of Management Board of PBZ Invest, you are one of the largest banking institutions in Southeastern Europe. You have unique insights into both growth financing and regional financial ecosystems. What blended finance models, combining private and public capital, have shown the most promise in supporting innovation-led growth in this region?
Thank you very much for that question. Blended finance sounds alike. So first of all, good morning to all of you. The other day I was checking the latest data. So let's say that Europe has around 4.5% of the world population, so the EU countries. States less, 4.2% of the total world population, whereas China is around 17%. When it comes to the share of the world GDP, States has 26%, but when it comes to the share in the venture capital funds, it's 52%. So double than the share of GDP. China, with the 19% approximately of the share of the world's GDP, has even higher percentage lift up, so 40% of world venture capital funds. And then Europe taking a share of 15% of the global GDP. So the share of the venture capital funds of Europe in the total worldwide, probably someone would know here, but it's around 5%. So expected share would be around 30%, and as a matter of fact, it's 5%. So basically, these blended models that we are having today in the EU, they are essential catalysts to enable further growth, to pursue innovation, to pursue the ecosystem of startups. I would say in the recent period, there are a lot of activities and EU-driven programs and instruments, but I would say that we need to be faster and we need to do more. So when you were asking what programs or instruments were proven to be effective, we can name, first of all, Horizon Europe, that is the biggest one, which is close to 96 billion euro, which is ending in 27, but I'm sure there will be another tranches. Then we have InvestEU, we have Western Balkans Investment Framework. So these programs are successfully and very lucratively combining the grants and guarantees and in order to de-risk the startups and to enable later stage and then to involve further the private capital and to bring companies to the scale-up phase when they become bankable. Furthermore, we have hybrid venture capital funds. For example, in Croatia, we have Fil Rouge. You asked me about some examples. There is Serbia Ventures. There are some more coming in the region. In Croatia, there is IMO. There is all these different funds that are able to, again, successfully mobilize and bring together the public innovation institution, so the public money, and link them to the private venture capital in order to pursue further growth in the startup, especially in the area of fintech, of biotech, as well as AI. And then let me mention also very important the role of supranationals from the EBRD, EFC, EIB, etc., who are also able to bring together very successful programs of concessional loans as well as different grants, combined with the first loss absorption, different guarantees, in order to provide a good environment, especially for the clean energy, energy transition, and energy efficiency, and in that way also channel this innovation activity in the area which is very, very important for the European competitiveness and sustainability. And I would go back to what Stjepan was saying. We don't want to see money invested and capital invested in the dying industries, but we need to be smart. So still, when using the public funds in order to pursue the sustainable areas which are bordersome for Europe, sustainable areas of competitiveness where Europe is lagging behind by its world competitors.
Thank you. That's also a great teaser for the second panel, which is going to talk about sovereign instruments that can be deployed. Finally, as Vice Chairman of AIK Bank and President of the MK Group, Alex Kostić brings a dual perspective as both a strategic investor and a business operator, leading major ventures in banking, agribusiness, and energy. My question to you is, from your experience as both an entrepreneur and an investor, what reforms, fiscal, regulatory, or strategic, could unlock more capital for scaling ventures?
Thank you, and thanks for the invitation to speak here at the Bled Forum. So I would first start with the strategic, and I think that, the strategy of Europe needs to change maybe to be much more pro-business than it is today. I would say, coming from a family of an entrepreneur, my late father, and then sort of trying to continue his, I would say, legacy and the success that he has created in the company. Entrepreneurs in Europe today feel sort of as they, have to hide somewhere. I have a feeling like it's not popular anymore in Europe to be an entrepreneur. The moment you see some industry or an entrepreneur making some better results, your first question is not, why is he creating the better result? How is he more efficient than the other? Did he invest more than the other? No. How I can tax this entrepreneur more because he's making more money than the other guy. The second thing, when you look at the young generation and, and how the Europe is, making it to be, they're not, I would say, looking up to those entrepreneurs anymore. The values, I would say, that entrepreneurs are, spread. I don't think that is the values that, the young, I would say, today in Europe, is the first thing. I want to be like him. And I have a feeling that, for example, in some other, places like the US, it is, like that. So firstly, the strategy and how Europe looks at entrepreneurs, I think, has to change, from the mindset perspective. Then the regulatory, we see it every day, being entrepreneurs in the Europe. You try to build a hotel, we have an example now. We are trying to build a hotel. We are trying to change for 30 meters the beach, to the right, because we are building a hotel where we expect every ultra luxury hotel we're trying to build, where we're expecting average daily rate to be, 3,000 euros plus, and trying to move the beach 30 meters to the right so that the people can have 3 hours more of sunshine. It's a logical thing to do, right? And we are actually, with the new plan, dropping down for 30% the gross meter squared on the plot. So why wouldn't somebody approve? 3 years, just changing the plan. I cannot even imagine the building permits, the location permits, and all that. That's probably going to take another 5 to build. Wind parks. We are talking about, green agenda. We want to be more green. We want to we want to build solar farms, wind farms. But on the other hand side, it also takes us 5, 6, 7 years to get the building permits for the wind. There's multiple companies in the regions, and Serbia, Croatia, Bosnia, Albania, Montenegro. We can cover the whole, I would say, economies and be sustainable, completely sustainable, if the right entrepreneurs could get the building permits. But every time somebody tries to do, no, this is because of this. No, this is because of this. Eventually, some of us, I would say, get it. But the time and the process until you get to there, it's, I would say, impossible. I mean, Ingo knows, I would say, you also know from the construction industry, because, of course, our family also is presented through the banking. In the banking industry, construction, real estate, and financing today, we have to look at those people, the clients that are trying to build, new, beautiful, parts of the city in the box. And we have to say, sorry, as he said, Basel, I cannot do it because of this. I cannot allocate capital because of that. It's almost as the regulation is pushing us to go away, I would say, from these new creative ideas. The moment when your client in the bank cannot prove that he has a certain, I would say, 100% certain that he can repay and have a 50, maybe possible 100% extra buffer of his cash flow, that moment you're saying, no, you cannot finance that person. So how are we expecting that we can finance, I would say, successful, startups, or at least ideas that could be, I would say, in the future successful? So I think that from the strategic perspective, I think Europe needs to change to look more pro-business and to welcome more entrepreneurs, to say these guys are our champions, not to be the ones, as soon as somebody's head jumps over the average, let's bring him down, to the average. And second, I think the regulation needs to change. Definitely. I mean, to be more pro-business and to approach those people and to say, how can you invest more? How can I help you to invest more, to invest faster, to build faster? So I think on those two things probably I would point.
Well, you've also answered the lightning round question, right? Which is, what was the one thing? You gave me two things that should be changed. But let me ask you, the other panelists now, if there is one thing that could be changed in order to improve this environment for these companies, what would it be? 60 seconds.
When do you start counting? Okay. In order to support hungry young men and women, much more, I think we need really a common market. We talk a lot about regulation. The real problem is less the regulation coming from Brussels. Within all our individual member states, we have gold plating, we have additional rules. We need a large common market on which to grow and scale up. R&D we have enough founders, the scale up is the issue. And for this you need a large common market and common capital pools. That's what we need to work on.
Perfect. Robert.
We live today in a world that is more split and more divided. It used to be more interconnected, globalization and so on, which then also impacts how funds, where funds are found. For example, for us in private equity, in order to invest in companies, we have to fundraise. And for the last 25 years that I mentioned, that funding has mostly been coming from abroad, not from Central and Eastern Europe. So Central and Eastern Europe was benefiting from the funding that was being collected, largely in the United States, in Asia, and across Europe. Because of the new reality, Central and Eastern Europe now has a lot of funds, but regulatory-wise, mostly or simply by habit, these funds are not allocated to, for example, private equity or venture capital. Croatia is an incredible example where, Croatian pension funds allocate money into private equity. Poland is not. Romania is not. These are big countries. Big pension funds must invest in, listed companies, cannot invest in private capital. This must change. In order to have listed companies, you must have earlier stage companies that need to be funded with venture capital, private equity. If they're not funded, then the system stops, and if not funded from abroad, which is now happening, the whole thing will stop.
Thank you. Ingo?
I would say, yes, we are discussing about very difficult regulation framework, etc. But I would go the other way and say change of the mindset. Are we pro-business? When I say are we, I mean starting from the decision makers, from the policy makers, etc. Do we support growth? Do we embrace the brave, the strong, the capable, or we are choking any initiative in order to prove that everyone needs to be more Christian than a Christ?
Alex, he repeated your mindset word, so you get another one.
Yes, I would. I would again say the mindset. If we change the mindset and we go more pro-business, I think that then that's gonna change the regulation. It's gonna change whatever strategic documents we need to change. But if the mindset has to change, and then I think we can work and we can change the way we think about business.
So what I'm hearing, just to recap quickly the themes, is first of all mindset. We need to convince the societies that being an entrepreneur is not a dirty word, and that perhaps there's a little bit more than a little Soviet legacy left in terms of how people are perceiving business and culture. The second is to think of an entrepreneurial mindset to regulation, rather than first the default being regulation, that the default is perhaps not regulating and seeing what happens, more what we see in the United States or to some extent in China. And the third point is that local financing, not just relying on foreign capital coming into these markets, is going to be essential if these companies are supposed to scale up. And what we see is that private capital will surely be defining Europe's future. And the Future 500 is not just about identifying the top 500 companies, but also matching them with partners that are going to help them meet the global challenge and become the global Future 500. Thank you very much. Thank you.